With the current market where Bitcoin is over $70,000, there's a lot of people trying to get into this moving train of Bitcoin. What is the best way to grow your Bitcoin portfolio? Well, there's a lot of things. There's a lot of different variety of strategies to choose from to grow the amount of Bitcoin that you have in your wallet. There's a lot of people mentioning yield farming, staking, but today we're going to be comparing two completely different ways of growing your Bitcoin portfolio. One is going to be Bitcoin mining. So you most likely seen or heard about Bitcoin mining. You have these huge facilities, you have these huge businesses that you can trade, that you can buy stocks of in the stock market, and you have options, crypto options more specifically. So which one of these make more sense to you? Before we start, I want to make sure you go comment down below which one do you think, and then after the video you can come back and we can discuss a little bit more about these two topics. Let's get into it. So as an income strategy for Bitcoin, we have, as I mentioned before, a lot of different ways, but we'll keep it between options and Bitcoin mining. You have these huge miners that you can buy online, that you can buy from these specific companies. You can even rent places where you can ship your miner to, and they can use geothermal energy, they can use solar or whatever other sorts of energy they can use to reduce electricity cost. Of course, there's a maintenance fee and a hosting fee, but most of the time it comes cheaper than just to hold it and plug it in your wall and just use your own electricity. So in the Bitcoin mining world, there's a lot of different things that you can expect. There's a lot of different machines that you can use for mining at a certain hash rate for Bitcoin. And with options, there's also a lot of complexity. You can do simple strategies, you can do multi-leg strategies, you can hedge, you can speculate, you can get synthetic dividends from your cryptocurrency. So which one makes the most sense to you? You user that, let's say, has a small amount of money and wants to grow that into more Bitcoin over time. Before we start, I want to mention that both ways are profitable. Of course, as we're going to see later on, one is a little better than the other, but both ways are profitable. There's a huge community both behind Bitcoin mining, and there's a community that is growing by the day for crypto options. So let's understand a little bit of both. If you saw our last video, which again, the card is going to be up here in the right corner, crypto options, like stock options, they give the holder the right but not the obligation to buy the underlying asset at a specific price in a specific point of time, usually in the future at expiration date. Well, this is the base, this is the usual textbook definition of options. But with options, you can also get passive income. You can open positions that offer monthly or even weekly yield on your cryptocurrencies. For mining, for Bitcoin mining, it is the process of solving an algorithm, and that's going to also validate transactions, securing the blockchain, the network that is specific for what you're mining. And as a reward for solving these algorithms, you're going to get rewarded. Everyone that does this gets rewarded in a coin, or a pool of people get this coin as a reward, so they split it accordingly. And this requires, as we mentioned before, machinery. It requires hardware. And this is the first major difference between options and crypto mining. There's a lot of initial required capital, both to pay electricity, to pay hardware, and also time to set up these machines. So the advantages here for crypto options is the lower entry barrier. With options, you can start small. As we saw here on the topics, you can go fractions of a contract. So you can go 0.001 Bitcoin contracts, and you can use these to open credit spreads, or you can sell calls or sell puts, whatever it is, to generate this weekly or monthly income. So for mining, it requires a lot of upfront capital. I saw some of these machines can start from $5,000. You can go a little bit higher tier for the 10,000 mark machines. Then of course you have these premium machines with higher hash rates, a little bit of better hardware. You can go up to $25,000. Some people spend even more on custom made machines. They're very specific for mining purposes. So you can see how the investment, it can get quite steep very, very fast. Let's talk about flexibility and scalability. For Bitcoin mining, there is no flexibility. You just earn as you play, as you mine. So the more you keep your machines running, you have to pay electricity, the more these machines are able to solve the algorithm and get rewarded for this. So there is pretty much no flexibility. And if Bitcoin is up or down, you're still going to be having these machine mine 24/7. And for scalability, the only way for you to scale your maximum profits, your rewards, is for you to buy more equipment. So it is more capital that you have to deploy in order to scale how much money you're going to be making, how much Bitcoin you're going to be making on a monthly or weekly basis. For options, the flexibility can be both by changing expiration or strikes. So for example, for creating an income, you can choose spreads with further apart legs. You can choose spreads with longer expirations. You have pretty much that puzzle-like option of choosing strikes, expirations, and that modularity that comes with the spread between your bought and your sold positions to make sure your maximum loss can be lower, your profits can be higher. You can play with the risk management to see what is the maximum loss, what is the maximum premium, what is the maximum return that you're going to get. So there's a lot of modularity for options, and that also applies for crypto options as well. Let's talk about the recurring income potential. So how much you can do on an average basis. With options, as we can see here from the income products tab on Bitopics, you can see that it can vary between 2 to 39%, and this is on a weekly expiration date. It can go up to 1,560%. This is a little bit more of a risky play with expiration all the way to June 28th, 2024. But everything that you do, all the positions that you open, they have maximum profits and maximum losses. And you can see all of that already before you open or close the position. If you scroll down, you see right here, I have created kind of this range channel for Bitcoin to stay in, and I'm going to get double profits, both from an above 65K strategy and also from below 70K strategy. You can see my max profit and my max loss here. If you saw the last video, this one I'm recording on the same date, the 70K one, we're actually above 70K. So if there was an expiration at that time, I would have had the maximum loss of 177. But because I believe that by Friday, Bitcoin will stay below the 70K mark, I think both of these options will be profitable. What do you think? Comment down below. Where do you think Bitcoin will be by Friday, which should be the day that you're watching this video. So let's hope that I got this right. So you can see how these projected values here, they fluctuate all the time. And that also applies to mining. Mining is dependent of the success of the mining operation itself. So you need to have a constant internet access. You need to have hardware efficiency. There's also the fact that the crypto itself is going to be volatile. It could be up 7% on a week, and then it can be down 10% on the next week, which also applies to options as well. This means that both cases, they have a variable amount of earnings that you can make throughout the week, throughout the month, or throughout the year if you want to project that for the whole year. What about risk management? Well, for options, again, we have the advantage here because of the modularity of options, you can limit your potential losses. So let's say you're bullish on Bitcoin, but you think BlackRock is going to screw up the Bitcoin price and is going to make it fall, or they're just going to sell a bunch of Bitcoin. You're scared of it. So you can buy a put. This way you're hedged. You have a risk management strategy to protect your portfolio in case Bitcoin does go down. Because you bought the put, you're going to be protected on the downside. And also as well, when you open a spread, the spread has a fixed maximum amount that you can lose. So you were prepared right at the gate how much you are going to make or how much you're going to lose, depending on how the underlying asset goes against or in your favor. Mining risk-wise has a lot of things that you need to pay attention. First of all is rising electricity costs. So if you live in a country or in a state that is not very mining friendly, they're going to push your electricity bill to the roof, or just places where electricity is expensive to begin with. There's also equipment failure, so hardware failure. One of these machines that you have, they just blow up or they just die. You know, they short because of a storm or something like that. These cases are rare, but they do happen. So it needs to be something in consideration when you're doing your risk management. Market conditions. So with market conditions for crypto mining, you could have as many machines as you want. Let's say you have 50 machines mining Bitcoin all year round and none of them break, none of them short. You have a steady energy bill. Everything is steady on that end. But the price of Bitcoin throughout the year goes down, let's say 40, 45, 50% like it did from all-time highs. So you were mining the whole year and you got your Bitcoin as rewards. But if you want to cash out, the price of Bitcoin at the end of the year, from all your expenses, all your bills that you paid, all the hardware that you bought, they're not going to cover all this structure that you built because the Bitcoin price fluctuated and went all the way down, making that it was not a profitable year for you. Of course, there's a huge step back here that I want to make because most of the people that are mining Bitcoin, they are mining to accumulate more Bitcoin and not to sell it. unless it is one of these big corporations. If you are a small miner, your thoughts is not to take profits from the mining itself, but it's just to hold and hodl this Bitcoin until it goes to the moon. So there's a little catch to this, that unless you're taking profits by selling some of this Bitcoin that you mined, this is not a point that affects you that much. So, conclusions. While crypto mining does help security and does help the blockchain itself where you're mining from, of course, if you're mining Bitcoin, you are helping the Bitcoin blockchain, you are helping the structure of Bitcoin itself. The core of Bitcoin is all about miners, all about people. It's a huge decentralized community, and this is a valid point for miners. But again, when it comes to passive income, options have the advantage there. They have a huge advantage just because of the modularity that can be scary, and it can be challenging for a lot of new users, mainly because hardware, you just follow a tutorial, plug and play. Most of these are already plug and play, so you just plug and play, put your wallet and let it run, and you're gonna see the Bitcoin accumulating on your wallet throughout the months. And with options, you need to have a little bit of elbow grease to understand Greeks, understand IV, how it works, when you're selling, when you're buying, all these sorts of things. So these variables can be a little challenging, and this is where Bitopics shines. We're creating these products, as you can see from the income products that we have right now. We're creating these products that simplify crypto options for you. So you can see that, for example, if you think Bitcoin is going to be below a certain value by this time or above a certain value by that time, you can open these positions very, very easily. So positions that before you had to go through 15, 20 clicks to select everything, project everything. Now it is just 2-3 clicks for you to open or close a position. It is that simple, and this is where Bitopics is gonna shine. So of course, I'm not saying that you should go all in into crypto options. If you are a miner, I'm not saying stop mining right now. It is not worth your time. No, I'm saying, well, consider exploring other options, no pun intended, for you to make an income out of Bitcoin. You can try selling Bitcoin spreads instead here on Bitopics. I think there's a lot of things that needs to be commented, so go down below in the comments and let's have a chat. I'm going to be active here for the next hours, so come down, let me know what your thoughts are, and let's share your honest opinions. Even if you disagree with me, this is the place where we can chat or we can discuss a little bit. As always, don't forget to like, subscribe, and turn on the notifications so you don't miss these next videos here. And if you have a friend that you believe will like this video, share that with him. We're growing and we need your help, so I already appreciate every single one of you who did this. Again, thank you guys for watching, and I'll catch you guys in the next one. Peace out.